Hey, Dan Passarelli here. Well, it's been kind of a bloodbath in crypto over the last month or so, and a lot of currencies have lost more than half their value, and a lot of the people in the financial media are saying that we could be approaching another crypto winter like we saw a couple of years ago. So, what is bringing crypto down right now? Well, I would say that there's three things. First of all, the prospect of the US government raising interest rates means that the dollar would be rising against other currencies, and cryptocurrencies are currencies. Now, that is a little bit in contrast with the second thing I think that's weighing crypto down, is that even though crypto is, well, I guess technically considered a currency, each of them, crypto has been acting a lot more like a risk asset lately over the past few months. So that means that it's falling in sympathy with the stock market, which will, of course, well, I would say, eventually recover. Now, that is, like I said, a little bit in contrast. A risk asset and a currency are two different things. A currency is, well, a currency, something you buy and sell things with, right? And a risk asset is an asset like a stock, something that does something for you that has value that may go up and down. So how do I justify that statement? Well, if you look into kind of how the internet works, if you will, right? When it first came out, there was what they called Web 1.0, or they call that in hindsight Web 1.0, where it's just like, let's just connect a bunch of websites. And then there was Web 2.0, where it enabled, like online shopping, and it enabled things like social media and that kind of thing, a lot more interactive. And what is underway now is Web 3.0. And what that is just a much, much more sophisticated version of the internet. Privacy management is one part of that. Smart contracts, there's a whole bunch of things, and that's way too long of a conversation for this video. I strongly encourage you, if you're interested in crypto, to look into Web 3.0. Now, the third thing that I would say is weighing on crypto prices is higher energy prices, because that's bad for proof of work miners, which is like what Bitcoin is. And with Bitcoin down at this price and with energy prices rising, miners can't cover the electricity bills, and so it becomes not worth it for them to mine things like Bitcoin that are proof of work. So those are the three things that I'm looking at in crypto. I hope that helps. This is Dan Passarelli, Trade Smart.